Hello, my name's Washboardjim. I love talking about chart patterns, moving averages, and being in the now. And that's all my trading strategy is chart patterns, learning the chart patterns, learning the moving averages, improving day by day, and then being in the now. Being in the know, you got to know what's going on in the market. You got to know what time of day it is. So I'm going to show you ways to find support off different time frames. And I've always said, when you're in doubt, zoom out. So we're going to go right into it. And I'm going to show you a few chart patterns. And if I were you, I'd copy and paste these. Let me move my head here. So learn these chart patterns. You can copy and paste this, or you can look up bullish, bearish chart pattern reversals, and you can find some diagrams and then start studying these chart patterns. Now, I've taught different strategies on using the chart patterns. I have a saying, if you can count to 3, you can trade with me, and if you can count to 4, you might make a little bit more. That's where the sweet spot is, between the 3 and the 4. So let's say you're having a continuation downstairs, going down. And that's a straight out descending triangle. 1, 2, 3, 1, 2, 3, 4, and it drops on down. Then you have a bearish flag, same kind of repetition. Right when it gets to that 3 and 4, if that doesn't break out at that point, then that's the time you need to go ahead and get rid of your security, or maybe add on in the trade if you think it's bullish. Continuation pattern to the upside, you have the ascending, you have the bullish flag, you have the bullish wedge, and you have a symmetrical flag. And I really love these wedges when they're dropped down and they don't look so much like a symmetrical flag. Then you have the reversal, which is a head and shoulders. If you say a head and shoulders, you might want to start thinking, or as you approach the shoulder line, you might want to start thinking about an exit idea or scaling out. Let it retrace and maybe come back and break the second time. We have a rising wedge, which is bearish. We have a double top, which is bearish, and we have a triple top, which is bearish. A lot of times, sometimes the double top will pull back and then have a triple top breakout, or it might have a triple top and then just go ahead and pull back. But then it come up and retest the fourth time, you could have a breakout. Depends on news. News pops up and it can run a stock real well. So that's a lot of reasons why I cost average down. And then we have the inverse head and shoulders, one of my favorite patterns. The fallen wedge, which I really love the fallen wedge. And then you have the double bottom. Fallen wedge means it's going down. This here is just a bullish wedge. I call it a symmetrical flag. Then we have the triple bottom to the upside. So each one of these is coming out of a snake. The ones that are, and it depends what flag breaks out of that snake. The snake is the knife. So once it breaks out of the knife, you got to see what's building up. You got to look at the candlesticks, and you got to know when the squeeze starts to begin, which is right around the end of the triangle. And I'm calling out these squeezes, and I'll say this thing's going to break out another minute, another 2 minutes. I'm not sure which way unless I see the pattern indicating which way it's going to go. Is it bearish pattern or is it bullish? Memorize them. This is the SPX on Friday. Now there's a chart pattern that got me in this trade Friday morning. The same was the SPY. I don't know if you can see it right now, but what we have is a triple bottom on the 5-minute time frame. So I'm going to draw a trend line straight across this double bottom here, which hits that wick. And then you can see it touched right over here last week. Last week we had a pretty good week. We had a lot of volatility. So it opened, when I saw this triple bottom down here, I called it out. I said, I'm jumping in this trade. We had a lot of news coming out that was very important, and all the news was fairly good. And then the ruling of the Trump thing, the market really appreciated. I didn't, but I kind of was against him and for him because I'm a small business. I know how the effect it is. And so we had us a triple bottom rated open. So when you're like just looking at the intraday, zoom out, and you might see that chart pattern that could get you in that trade. And then we had a hammer. Now this is all on the 5 minute. So if I wanted to change time frames, and I'm looking for a support, like right here, I knew this support was going to pull back and hit that, and that's why I took that trade, because of that quad bottom. I mean, you could call that a bottom, that a bottom, and that a bottom, a triple bottom. And then we came down for the quad, and we lit out with a hammer. So I waited for that thing to pull back to where I can get me a good price, and I jumped in the trade, got out right at the 3 white soldiers on the 5 minute. So you have a quad bottom with a hammer with 3 white soldiers hitting the 200 SMA on the 5 minute time frame. I had all indicators to take that trade. Then I called it out again on the pullback with this hammer, kind of long leg doji, and we bounced off the 50, and we let out, and we broke out with that news. So I got in that stock right before that news hit. I knew it was risky, but I still did it. And then it popped, and when that candle came off, boy, I got out of that trade as fast as I could. And then we came back and hit the 63 EMA, another trade call, and it run up. And then we ended up with a triple top. So I'm sitting here calling puts at the double top. People thought I was crazy. I said, I'm getting in the puts. And the dang thing sold out for 25 minutes straight. Then once we started seeing a green candle, I called this tweezer bottom. I said, we're getting ready to break out. We had a tweezer bottom. This is all in the 5 minute. And it zoomed out, and we had a triple top. Triple top is bearish. So all these indicators that I'm showing you, we have double top and a triple top. Both of them are bearish indicators. What pisses me off more than anything is when somebody calls out a triple top breakout. I won't take it. I'll never take it. It has to have a good, real good catalyst for me to take a triple top breakout. But if it pulls back and I have a triple bottom out of this here triple top, and it starts to reverse back up to the upside, I might take that quad top, which comes off of a triple. But it's very important to know that a double top is bearish. I got in the puts. A triple top is bearish, and I got in the puts. So you look at the trade. We had a double top off that wick, and we had to pull back. Then we had the tweezer bottom with 3 white soldiers get out of the trade, and it run up to a triple top. Triple top is bearish, pulled back. Then we had another tweezer bottom, and we called this trade out in the room. Now this tweezer bottom ended up at yesterday's close. So that kind of got me in this trade. And it held support off these here candles right here. And then we had the rest of the day up to the upside. We pulled back and hit the 200, 100 EMA right here. Bounced off the 100, bounced off the 100, bounced off the 100 for 3 different times. There's another triple bottom with the wicks hitting the 100. So this is real clean charting on the 5 minute. Now me, when I'm trading the 5 minute, I'll pull this back down to the 1 minute. And I'll try to get in the best entry that I can. So here's the 5 day. We had that all solid support right there on the 5 day. So I knew right at open to take this trade. And as it started to come down, we hit the 200 SMA, and that's one of my solid support areas. Called that out. We had a double bottom, counting the wick, off the 200 SMA. Now I measure from the bodies of the candles, and I use the wick as a confirmation to get in and out of the trade. I mean, if I got wicks, tweezer bottom, and I see a wick, I'm going to call that a support level. Then it breaks out to the triple top, and the news came, and boom, this sucker run. Oh man, 3 white soldiers, and I was feeling good about the day. I was actually feeling real good, and I stayed in them, and man, this thing run up. I sold a couple at the triple top and held one, and then sold that big one. Then we came back and hit the 63 EMA. I've got all these moving averages perfect for, I think, right now. I'm always learning. If you think you got a better one, send it my way, and I'll start to study it. And I'll use different time frames that will work best for that moving average. So we had a tweezer bottom off the 200 EMA, and that's a buy signal. It's a head and shoulders. If you look at it closely, you have your head, and you have your left shoulder, and you have your right shoulder. So you have a head and shoulders off the 200 with a tweezer bottom. Now I take this to this is on the 1 minute. So I'm using fine tuning to find the best entry to take the trade using the 5 minute. So this was approximately right at 9:16. I'm going to put a price line on that at 9:16. Now I'm going to go to the 5 minute. And I'm going to find out where 9:16 was, which was right here. Now maybe I would have took that off of the 200, but I don't think I would have. I would have took that trade off the tweezer bottom right here on these bodies, and that's right above the 200. So we had the 100 EMA. I'm sorry if I said 200. That's 100. That's the 200 EMA. Would I have took that? I don't know. But I definitely would have took the tweezer bottom. So on the 5 minute, I would end up taking the trade right around in here at 67.71.15. And on the 1 minute, I would have took that trade at 68.59.49. Then we came back and retested it. So that's a double bottom. What's a double bottom? It's bullish. I called the put at the triple top, and then we took the double bottom and run it back up. Now what do we got? We got a two-headed snake. That's two-headed head. We got two heads on a head and shoulders. So we're going to draw that trend line from that left shoulder all the way to that right shoulder. And that would have been your exit idea once we hit this triple top and get out of that trade. And that's another head and shoulders. Then it came back down. This is all in the 1 minute. They're easy to read. They're easy to read. So we had a resistance right here. And we bounced off that resistance right there. We bounced off the 200 right here. EMA. And I'm looking for coalitions where it kind of receipts, where it kind of tells me, okay, that's a solid support. We got body, 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 and it likes bouncing off that 200 and then come down. We have a tweezer bottom, boom, to the upside on the 1 minute. So to keep me bullish in the trade, I'm going to go to the weekly time frame. I'm going to erase all this stuff. Now I know this stock's been respecting the 21 EMA all the way up. We had a tweezer clip bottom close right in here. So That's telling me that as long as we stay above the 21, we're still bullish. And this is on the weekly. So if that starts to drop, I know the next support could be the 50 SMA. So now I want to zoom out more. I want to look at the yearly time frame. What we had here is a triple top. And we broke out that next year. So I was wondering, each one of these represent a year. Now we've had a triple top breakout. And then we had 3 white soldiers. So that tells me that this stock is overextended. It's very bullish. Very bullish. I mean, see what happened when we had the 3 white soldiers here. It took a couple years for it to go ahead and break out again. Now we've got another 3 white soldiers here. I wouldn't be surprised if we pulled back 900 points, or even halfway, maybe even to this wick, right around 6,100. That wouldn't surprise me one bit. Or we just continue with the run. Now the government's not printing that liquidity that Biden did and Harris did. They printed so much money, and we caught this bottom. This thing went all the way down to the 200 on the weekly time frame. And I'll show that to you in a second where I called the bottom. But when you're in doubt, zoom out. I say zoom out all the time if you're coming to a new trade. Get familiar with, is this thing overbought? Is this thing at a solid support? Is this kind of iffy, or does it have some kind of pattern for it to break out? It needs a pattern. It needs a chart pattern, candlestick pattern, some kind of pattern for me to want to get into the trade. We had 3 white soldiers right here, and it took a year, almost a year and a half, 2 years for that thing to start to break out. We had 3 white soldiers here. It took 2 years for that thing to break out. We have 3 white soldiers here. It could consolidate for 2 years for a new breakout. So we could have a lot of volatility in the market. That's what it tells me. So I'm going to take this and go to the monthly time frame. 15-year monthly. I called this pullback here. We hit the 50 SMA. 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 We hit the 50 SMA almost. We're above the 9. As long as we stay above the 9, we're still bullish. We got to look at that candle. See if that's a bear candle for it to pull back and hit that 9. And if it doesn't hold the 9, then I've got the 21. Then if everything just goes to hell and we get into a big war, I got my eyes set down here at the 50 SMA because we've bounced off the 50 here, we 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 bounced off the 50 here, and we could end up bouncing a little bit off the 50 here. Then we got a double bottom. Then we got a double top breakout. So the double top breakout can pull back and bounce off that double top, bounce off the 21. So it's more, and it's clean. I don't have nothing on here. I can take exactly what's going to happen. As long as we hold the 9 on the monthly, we're still bullish in the trade. And if it hits the 9, I'd take it and I'll go ahead and scalp it, day trade it. Depends on the market conditions. Now these fat cats been bitching about the tariffs for over 1.5 to 2 years. If Trump gets elected, there's going to be a tariff war. And they've been calling recession, and they've been calling pullback, and nothing, and it hasn't. We had one little pullback, and I think it was rigged, and I called it off the 100, and we're going to go to the weekly. I'm going to extend this out 5 years. So this is when I called the trade back when we had that big sell-off. Now I had a lot of bears around me, a lot of scared people. And I think when the retail trader came in, a lot of the fat cats, this is an institutional trade. I didn't hear one fat cat call this out. I didn't hear one fat cat call this out. I did. We had a head and shoulders off the 200 SMA on the weekly time frame with 3 black crows. And I called this sucker out. People were scared to death to trade. And I said, don't be. I mean, this is an opportunity to go long in the trade. And I did. I went long for a couple of years in a couple stocks. But what I'm saying is, and it boosted my portfolio up. And I got a video that I'm going to put down here below this in the content that just specifically talks about the 200 EMA and SMA, how strong of a buy signal that is. First, we bounced off the 200 EMA and run it up to the 50. Then we came back again and retested and shot down to the 200 SMA and hit the 50. Then it created a head and shoulders. It broke out. Now this is the trick about the head and shoulders. Nobody will tell you this, but I will. Nobody will tell you this. So you got your left shoulder, you got your right shoulder, and you see this thing breaking out, and you go, oh, damn it, I missed it. It's going to take off. Have a little bit of patience. That second shoulder pulls back and hits that second shoulder, you're in business. That's the sweet spot. And it breaks out. Then we hit the 100, and it breaks out. It starts gaining respect off that 21. Then we're back down here to that 200 EMA where we were right here. And I called this out. And then I called it out here at the 21, just a little bit while back. So you go to the daily, we bounced off the 200 right here with a big old gap, pulled back and hit the 200. Then we had the 100 EMA, and we bounced off of it right there. And I called that little pullback right there. Still respecting that 100, 100 there, 100 there. So on this SPX, on the daily, I've seen it's respected the 100, respected it right here, resistance, come up to it, then we got the support level, and then we know that that's a pivot point, and we hit it, come close, hit it, and we could hit it again. But if it fails, we've got that other support level we got to look at. We got to go back and look at the yearly and the weekly and the monthly and just kind of get some kind of idea. Zoom out when you're in doubt. Then I'll take it to the hour. So here on the hour, we got a double bottom for the entry to take the trade to one of these moving averages up here, which is the 200, 100 EMA, 200 EMA, and the 200 SMA. And Friday, we ended up at the 200 SMA. Every time we hit it, we pulled back. The time frames will look different in different, the moving averages will look different in different time frames. So we got a double bottom, and I see something else in here that really tickles my fancy. I'll take this trend line and I'll run it to right there. Now that's called a head and shoulders. You got your left shoulder, right shoulder, and right shoulder. And then we got that pre-market low from yesterday, Thursday. Resist, support, higher low, tweezer bottom. Boom, baby. Double bottom up to the 200. That's on the 1 hour. But I'm fiddling around in different time frames as I'm in the trade, looking for a resistance level to get out of the trade. And if I see a triple top, if I see a double top, if I see a shoulder line of a head and shoulders, if I see a top of a expansion megaphone, I'm going to be looking for resistance, and I'm always the first one out. A lot of people hang on and say, damn it, I'm down. It tanked on me. Well, that's because we just got through hitting a double top. That's because we just got through hitting a triple top. That's because we just hit a shoulder line on the head and shoulders. That's because we hit the resistance level for the third time on an expansion pattern, a megaphone. So learn them chart patterns. I guarantee it'll make you 20 times better than what you are today. If you just have AI and computers looking for your support levels, and it helps, but trend lines and chart patterns and moving averages will pinpoint your entry levels. So I've got this a little bit too long. I'm going to take it back to the 1 minute, and I'm going to look at the SPY. So I'm going to chart up the SPY. I want to get ready. I like to trade the SPY in the SPX. I find it a lot easier to trade the SPY in the SPX than I do any indice that doesn't have a support level or a chart pattern to tell me to take the trade and to know when the market's overbought. Now, a lot of people, I've been trading for 22 years. A lot of these kids out here today were just kids learning how to trade the market. I was one of the first ones to have a chat room back in 2007. So I've seen a lot of people. Some people can pick up on it real fast. Everybody has a different way of trading. Some people that have traded with have got better and become millionaires. I can name a bunch of them. I can name a billionaire that just a penny scalper, for 10 cents, 15. I showed him a little different trick, and now he became a billionaire. And I get, he always messages me and tell me how he appreciates me when I opened up his eyes. But this was back in 2017, I think, or 18. So here's another fine example of how to take a trade. So I'm sitting here Monday morning, and I'm looking at pre-market, and I see a triple bottom right at open, quad bottom. We had a nice little pullback right there, but I see a trend. I see a support level. And I'm going to put this price line. Support, 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 support. Called it out. Double top, get out of the trade. Or get out of it once it hits the 200. There's your first scalp. The first hour and a half of the day is the scalping. Scalping. So I noticed and recognized that it held support off the 200 once I got out of the trade. It broke out. Then had a double top. Then pulled back to the 200, where we had support here before, which now became a double bottom. Got in the double bottom. Sold it at the triple top. Kept one for the news. Boom, that news came in. This thing ran up to $2,000. I said, shit. I didn't know. That happened so fast. I jumped out of that trade at the peak. So I'm just saying, chart patterns speak a lot. We had a double top, pulled back, supported double bottom off the 200. SMA broke out, and I was so freaking happy with that. Sold two of them at the triple top, and then kept one, or sold two and then kept one. Boom. So I want to zoom out when I'm looking at these charts. I'm going to go to the 5 minute. We had a double bottom on the 5 minute to take that trade. Then we come over here, we had a triple bottom. We got support off the 200 EMA. Boom, boom, breakout. Pulled right back to that previous support level, breakout. Hit the resistance on the 5-day time frame, pulled back. Created head and shoulders, broke out. Then I'm going to go to the one. Then I'm looking at the 15 minute, the 10 minute. There's another verification that this trade's good. Go to the 15 minute triple bottom. 15 minute, same damn thing. Straight across, take the trade. Everything's bullish. 30 minute, double bottom. Take the trade to double top. Get out of the trade. 3 white soldiers on the 30 minute. Get out of the trade. 3 white soldiers, get out of the trade. Pulls back to my moving average of the 12 and the 20. I mean the 200 and the 100 EMAs. And the 50 SMA breaks out to double top, out of the trade. Triple top, out of the trade, right into close. You got a double top right there with bodies of the candle. Or almost a triple top, but definitely a double top. And that's on the 30 minute. Then we did the hour. We got a head and shoulders. We got another head and shoulders right here. Left shoulder, right shoulder, boom. Solid support. Then we got the daily. And then we got the weekly. Don't be afraid to zoom out because it will keep you from the doubt. And when you're in doubt, zoom out. We're off the 21, so I'm bullish. I was telling everybody, there's fear going in. We're still at the top. I mean, we still can have some volatility. Being in the now, we're getting into it with Iran. So we got the tariff, but the tariff, we have to let that play out. That was the big factor. Now we've got the Iran deal. If we can become peace, we could have another big old breakout in this market. But for now, as long as we hold the 21, we're still bullish. Then go to the monthly. Don't be shy to move these out. See if you see any candlestick patterns or any kind of pattern on the monthly. We'll see we have a trend line on the monthly. That body to that body. This ain't come down to 550 if it got real bad enough. And we have triple bottom right here. And that would be above the 21, which we bounced off the 21 many times. So we got a triple bottom at that level right there. And that could be the top of them 3 white soldiers. So that could be a solid support at 625 if we decide to have another correction. I call it a dead cat bounce. And that's what we got. And that's the monthly. Then we got the yearly, 20-year. And that tells me a whole different story with the 3 white soldiers. You can see, well, it finds some kind of resistance there. It might take a year or two for this to consolidate. And we could be playing a choppy market. And you can make a lot of money in the choppy market. It's not the time to be holding and swinging unless it's a few days. Now's the time to be scalping and day trading. The fat cats, listen to what they got to say. They're mostly progressive liberals. Half of them don't even know what the hell they're talking about. So that's it. Learn these chart patterns, and you'll become a very good trader. I guarantee it. My name's Washboardjim. I've been trading for 22 years. I draw my own trend lines and price lines, and I get verifications from others. Nice little indicators to expand, to make just more confirmations that I can take the trade. Washboardjim talks about chart patterns, moving averages, and being in the now. And have a great day. Learn them chart patterns, I'm telling you. Follow me on YouTube, hit the like. Please hit the like and make a comment. any kind of comment. Ask me what kind of moving averages I have, and I'll write them down for you. Watch me on YouTube, and you'll see me work them. And that's it. Have a great day. Do your homework.